Welcome to the analysis report by financialmirror.tv. Crippled banks in the United States and Europe sank deeper into state control as governments fed them more cash in the latest efforts to stabilize lending and kickstart ailing economies. The U.S. government is set to unveil a deal that will boost its stake in Citigroup through the conversion of $25 billion in preferred shares. The Citi initiative could leave U.S. taxpayers with as much as 40% of a bank that once dominated the country's financial services industry. It comes a day after Britain agreed to insure £500 billion, or $715 billion, of risky bank assets and struck a deal that could raise the government holding in Royal Bank of Scotland to 95%. On Friday, a second major British institution, Lloyds Banking Group, prepared to tap the insurance scheme. Fannie Mae, the government-controlled company seen by the U.S. administration as a key conduit to stabilize the housing market, reported a $25.2 billion fourth-quarter loss, forcing it to ask for $15.2 billion from the U.S. Treasury. World stock markets slipped towards six-year lows they registered earlier in the week, and the dollar hit a three-month high against major currencies as concerns intensified about profits at companies and banks. Gloom piled up in the United States as well in data released on Thursday. The number of U.S. workers filing for jobless benefits jumped to a record high of 5.1 million in mid-February, while U.S. durable goods orders hit a six-year low in January. Carmaker General Motors posted a loss of nearly $31 billion in 2008 and said auditors were likely to cast doubt on its viability. Meanwhile, many Americans applauded the spending plans and tax breaks set out in President Barack Obama's record budget, while others questioned the yawning deficit it would entail. Obama said the budget is a first step toward creating or saving millions of jobs and laying the foundations for growth amid the worst economic recession since the Great Depression of the 1930s. The spending plan also seeks to enact a bold agenda to upgrade schools and expand health care coverage next year, all while cutting taxes on lower and middle-income Americans. But others said they were unhappy about the huge spending set out in the proposal, which foresees a whopping $175 trillion deficit for the 2009 fiscal year. Wealthier professionals earning more than $250,000 will have to pay higher taxes under the plan. Thanks for watching FinancialMirror.tv.